Africa, integrate Africa, industrialize Africa.
We continue with this special coverage on the World Economic Forum happening here in Kigali, Rwanda. And we've just been talking to a few delegates who've been attending this function and business leaders. Today we're honored to be joined by Razia Khan, who's the head of research at Standard Chartered Bank, to give us an analysis first on her perspective on how the World Economic Forum is happening. And of course, we'll delve deeper into a bit of the numbers. Thank you for speaking with us. How is it so far?
Okay, this is a really interesting time for the WEF to be meeting on Africa, because in many of the previous years, we all know the story. It was about Africa rising, about how many of the world's fastest growing economies were in Africa. We were in a commodity super cycle. Nobody needed to think too deeply about growth. All of that seems to have shifted. The very fact that within Africa, the two largest economies in sub-Saharan Africa are experiencing sub-trend growth has changed quite a lot for the region. We know that commodity markets have reflected fears about what might be happening in China, and this has implications for Africa. And there's also been a general tightening of financial conditions. Countries like Kenya, which some time back could go to international capital markets, issue outsized euro bonds, are now very aware of the fact that sentiment towards emerging markets broadly has shifted. So it doesn't matter whether a country is hugely leveraged or not, a commodity producer or not, external conditions are more difficult. What this means is that the growth in Africa is not going to be happening on autopilot, not that it ever did. And this, I think, this year at this particular WEF is leading to a lot more conversations on the nitty-gritty, if you like, of what needs to be done to ensure that a growth environment is sustained.
And I'm looking at the growth environment in terms of having that support system to attract investment. Is Africa ready?
This is a very important question, and a point that has been made in many instances in the past is that it's not always about just foreign investment. We know the economic case for Africa needing that foreign investment. The amount of domestic savings within Africa is just not high enough, it's not sufficient to meet Africa's own investment need. This means typically that many countries have current account deficits. They need their investment spend to be financed from elsewhere. But a good starting place, and perhaps one that we need to revisit in the current context, given how global markets are operating, is what can be done to raise domestic savings? What can be done to ensure more of a domestic pool of savings? Because in years when there is going to be perhaps a retreat of foreign investment, you don't want the momentum to fall away entirely. And it will come back sooner to those economies where domestic players are making a sizable contribution. If domestic investors feel positive about prospects, the foreign investment will follow.
You've alluded to an aspect that World Bank actually has reiterated in their economic survey, especially for Kenya, in terms of they look at kind of the saving culture of countries. We're not there yet.
There's a lot that needs to be done, and I think the traditional volatility of growth that we've seen in Southern Africa in Sub-Saharan Africa hasn't necessarily helped at all. So this is much more true of the commodity-dependent economies, but we also know that there have been pronounced economic cycles in Kenya, where a country relies a lot on a commodity-related boost to growth. It feels as though there's a lot more liquidity when commodity prices are doing well. When that goes, everything tends to be very cyclical. And what you need for more stable development outcomes is a sustained record of growth, a sustained level of growth. Now, Kenya is very interesting in this context because, of course, it's not had that very traditional commodity dependence. Kenya has also been the world's leader in terms of mobile money. So we know that Kenya has experimented with more innovative ways of tapping into this. But at its root, we still need to look at the savings culture. As part of the growth surge that we've seen in recent years, the Kenyan government has been spending more on infrastructure, and we've started to see deficits that are much greater than what we'd traditionally been used to in Kenya. There may have been a good reason for that. There was absolutely a need to upgrade infrastructure, but if we're not seeing that level of government savings, are we seeing much more in the way of private sector savings to compensate for it? What is going to raise the overall national rate of savings to ensure ensure that there's greater consistency to how investment can be financed in the future. What we're saying is, looking at the recent past, this probably hasn't been the pressing concern for Kenya. Its growth has been noted internationally. The foreign investment has poured in. But if there are going to be more difficult times, these are micro-level reforms that perhaps do need to be looked at more closely.
Razia, let me speak to you. Of course, you look at the continent at large, and let's group West Africa, we have East Africa and South Africa. You look at the numbers, you kind of see where the money is going into. If you could just profile the three and actually see what gives each a competitive edge.
This is a very good question, and as much as we say Africa isn't a single country, well, even on a sub-regional level, it's very different. Right now, East Africa looks good simply because it's had less of a commodity dependence than the other regions. And if you look at Southern Africa, if you look at West Africa, those individual regional blocks are dominated by the big economies, by Nigeria, by South Africa. The fact that those economies are performing much less than has been their recent trend, are not performing that well, has implications for those wider regions. East Africa in this respect is seen as the relative star. It's where growth rates of at least 6% or higher are still being sustained. There is the promise of future hydrocarbons output, which is still driving investment to some extent, but the question is what more can be done? It shouldn't be left to just the fact that the rest of Africa doesn't seem to be doing that well that East Africa shines. East Africa should be shining because of the structural reforms that are going to guarantee robust growth even in the event that commodity prices come back, or even if they don't, even if investor sentiment towards Africa remains very difficult. So the question for the region is, we've seen very good rates of growth recently. A lot of this is related to the infrastructure spend. There's been a definite stepping up of spending on infrastructure, but what more can be done to ensure that there is robust growth momentum that remains in place? Why is this important? To answer your question about how the different regions have been seen, we have seen instances of countries reaching 7% type growth in the past 10, 15 years, in East Africa, in West Africa, in Southern Africa. But what our experiences, especially at Standard Chartered, what we've seen in other developing regions tell us, is that a little bit of growth just for a few years isn't good enough. What is needed is sustained growth at a sort of 7% level for several decades to reach the kind of development outcomes that we would like to see. Are those reforms happening?
You sit on this other side of the table, and just as we finalize this interview, because you advise investors and you, of course, advise governments in terms of where the money is going. But I want to pose this question to you in a sense that imagine you're an investor and you have the whole entire continent. Which country or region would you invest in, and what sectors will you put your money in?
We think that ultimately the growth story in Africa is really about what is happening at the consumer level. So the FMCG sector still. If there's going to be growth in Africa, we are going to be seeing incomes rising. We are going to be seeing people spending more. If we're looking at the long-term drivers of growth, urbanization, people moving out of rural areas into taking on more urban economic functions, a higher value added, greater productivity gains, the adoption of technology, that immediately throws out the sectors that are going to be benefiting from this growth. The banking sector, I would say this, because it happens to leverage off everything that's happening with GDP growth. The tech sector, where enormous strides can be made. There's huge potential, not just for catch-up, but for Africa innovating on its own. And of course the FMCG sector, because if you've got a growing population, which is a key strength for Africa, and if that population is getting wealthier over time, that's going to be reflected in consumer trends.
Very well. Lastly, before I let you go, the World Economic Forum for the first time in East Africa. What are your sentiments, day 2 of the event?
The World Economic Forum had been held in Tanzania some time back, but what was interesting is that was the immediate aftermath of the crisis. So very different mood. It was much more about how do we contain this? How do we stop it becoming a problem? Now we're seeing that perhaps we had a lot of false dawns in terms of the global economic recovery following the global financial crisis. East Africa has generally sustained good growth, but there's a growing realization that even more needs to be done, that nothing should be taken for granted, that there are always those additional reforms that can really lead to better outcomes. So I think if there's one defining feature of this, and important that we are in Rwanda, because unlike the other countries, a relatively small economy, landlocked, has a lot of challenges that it needs to overcome, but has shown how just through the approach to competitiveness, just through that willingness to achieve results, a lot can be done. And this, I think, is an example to the wider region.
Indeed, and I would like to leave it at that. Thank you so much, Madam Razia Khan, for speaking with us.
Thank you.
Of course, we continue with this special coverage on the World Economic Forum, really taking it a bit deeper, looking at what are some of the deliberations taking place. Razia Khan has invested the time in looking at research across Africa as she heads the research unit at Standard Chartered Bank. These are conversations that we continue to bring you on your favorite TV stations. My name is Laban-Cliff Onserio, and enjoy the rest of your viewing.
Africa, feed Africa, integrate Africa, industrialize Africa.